Hi, this is Brett Senkis. I am a corporate lawyer. I do a lot of business partnership and founder structuring, formation work. We run through a process of 25 to 35 different questions for founders to kind of answer and feedback to me. And one of them is, what do you want to happen if your partner becomes disabled, unable to work in the business or passes away? What should happen to you, to your interest in the business partnership? And it's often the case that the initial response is, well, I want to pass it on to my heirs, to my family. And then we get talking about that a little bit. It's like, okay, well, why do you want to, why do you want to do that? Well, I want my legacy to live on. I want them to be able to enjoy the fruits of my labor. So, well, what about your business partners? Does your business partner have kids, daughter, son? Yeah. Do you want to be in business with them? Well, not particularly, right? So well, do you think they want to be in business with your kids? I don't know. I mean, maybe, right? So we get in this conversation about if your children are interested in the business and they're capable and they're driven, they'd be good partners in the business. That's called the succession plan, right? And when they become of age and they're interested, you bring them in and you groom them, and they become employees, or maybe they eventually become an equity partner while you're alive. If you pass away and that hasn't been happening at all, they're probably not ready to step into the business, and you probably don't want to be thrust into business with your partner's kids any more than you want to be thrust into business with yours. And the light bulb usually goes on at some point in time that's kind of true, right? Like, that isn't really necessarily a recipe for success. And how we usually end up handling this, and it needs to be done up front in your partnership or founder agreement. In an LLC, it's an operating agreement. In a corporation, it's a shareholder or stockholder agreement, is what happens in your death or disability or that of your partners is that the business or the other partners have a right to buy out the interest. And they have a right to buy out the interest usually for fair market value. So that's the key, is that you've built something amazing, something of value, and you are able to pass that on to the next generation. But if they haven't been groomed to be in the business and they're not ready, oftentimes they're not prepared, and they're probably not going to step in and be a wild success. I'm not trying to criticize your kids. It's just you're not ready for it. That is a pretty good setup for them to ruin the legacy. It just kind of is. Again, if there's been a succession plan and grooming, it's a different story. But it's not that they don't have your legacy, but they get it in the form of a check. And there's a million other things they can invest in. There's a million other businesses they can start, a million other businesses they can buy into. But your partners who are left behind, you know how many businesses they are open to them, right? I mean, to make their livelihood, it's one. It's the one they're in, they're mired in. This is everything. They can't just, no one's there to give them a check, right? They have to be in this business. So be really smart and intentional about what you're doing and why you would pass that on to the next generation. The easiest thing to do is just to buy out a partner that passes away or that is disabled, to buy them out for fair market value, which can be in a number of different ways. It can be some multiple if the business lends itself to just a standard multiple of EBITDA. You could hire an independent business appraiser to determine value, or you could try and work it out together and then use one of those methods if that doesn't work, or the appraiser if that doesn't work. But the point being, I think everyone should be proud of what they built. And if you build a successful business, that's amazing. And I get it, emotionally want to pass that on to the next generation. But let's just think about whether or not that's really, really wise if there hasn't been a succession plan. So that's something up front to really think about. And usually the best thing to do is to force that buyout. Now, if you do force that buyout, think about key person life insurance, which is a type of insurance product that pays off if one of your co-founders passes away. It can also come up in if they become disabled. But it gives the company or the other partners the money to buy out the other partner. And that's something really, really important, because otherwise, if you can't pay fair market value, what else do you do? There are other ways to handle the issue. You can let the interest be passed on as a non-voting interest. So your estate or heirs get it and they just get the economic interest. But even that's kind of fraught with problems, because what I see often is that the party on the outside, so your estate or heirs, don't have an active role in the business, and they start to question what's being done, right? They don't have a seat at the table, and they start to just sort of, I think it's human nature to kind of think the worst. Like, what are they doing? Like, why? I don't know what's going on. It's like, a lot of times the easiest thing to do is you've built something amazing, give your estate a check and let them do anything else in the world with it. Again, if you've got children, you want to groom them for the business, that's amazing, but do that while you're alive and make sure that they're prepared for it and make sure your partners are good with it and give them a role in the business. Then don't just drop it on them. I tend to think that can be pretty reckless and not really well thought through. So anyway, would be interested in your thoughts if you're running that issue, don't know how to handle it, have a question about it. If you have not done a partner foundership agreement, reach out to me and let's talk. I always welcome questions. Technical questions are great. Let me know what you're dealing with.